In this video, I will do the technical analysis for S&P 500 index for the week commencing from February 22nd, 2022. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results here as we are getting for last many months. Okay, so before I do the technical analysis, let me clear these two things. Number one, markets as of now are extremely volatile, extremely risky to trade. Okay, because of primarily because of this scenario that is there in the Europe. So this is the Russia and Ukraine, this problem. Okay, so the markets are extremely volatile, extremely risky, and I will not advise anyone to trade as of now until and unless there is a trade with more than 99% certainty. Okay, so, and the second one is that I wanted to share is, see, because of this problem, okay, because of this thing particularly, okay, Russia and Ukraine, okay, these tensions. Then secondly, the Feds, okay, they are going to hike the these the rates. Uh, so the markets are extremely volatile, and because of this volatility, okay, high volatility, heavy volatility in the market, many, not just many, but almost all of the traders, small, big, okay, retail or institutional traders, okay, so they have lost a lot of money in the market. Secondly, if you have bought shares of a particular company and you see that the shares have come down by 10%, 20%, maybe 30%, then again do not worry about it. Okay, do not think of exiting your positions, because as of now markets are extremely risky. So just hold your trade, wait for a few months. Okay, everything will be normalized and all of your losses will be recovered and you will be in net profit. Okay guys, so these are the two things, okay, that I wanted to share here. Now let's do the technical analysis. So first we will do the technical analysis on the weekly chart, okay, and then we will go to the daily chart. Okay guys, so we are here on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour, 1 week. Okay, so now let's do the technical analysis on this, the weekly chart. First comes the Bollinger Bands. If you see, this is the lower band of the Bollinger Band. There comes the median of the Bollinger Band. Market is in between the lower band and the median of the Bollinger Band, which means the market is bearish. Then comes the moving averages. Now, if you see that there is a crossover in the moving averages. Okay, now this has happened after 1.5 years, means after October 2020. Okay, so this is for the first time, okay, that has happened. This is the crossover, okay, which means that yes, now through the moving averages. And so one thing is this, the crossover. The second thing is that the market has closed below the moving averages, which means the market is bearish. Then comes the Ichimoku. Market has closed above Ichimoku, which means the market is bullish through Ichimoku, because it is trading in the bullish zone of the Ichimoku. Then comes some other technical indicators. If you see the MACD, the directional MACD is clearly bearish, because the MACD is 16 or 17 and the signal is 66. Okay, so MACD is 16 and the signal is 66, so it is clearly bearish. Secondly, the divergence, MACD is moving average convergence divergence. So the convergence or the divergence in the moving averages. As of now, if you see that this divergence is increasing in the MACD, this divergence is increasing, which means that yes, for a moment market may come down, okay, but then for sure there will be some reversal. Okay, means the market, the moving averages will be here, there will be some reversal, and then further the market will come down after hitting the moving averages. Okay, so it will be there because of this, the divergence, because market has to reduce this or improve this divergence here. Okay, then comes the stock RSI. Stock RSI is clearly bearish because the K channel is 8.12 and the D channel is 8.93. Okay, it is clearly bearish. Then comes the divergence in the prices of the candles. Okay, so as of now this divergence is normal around 47, 48. Okay, this is normal, so that's not a problem. Then comes the momentum. Okay, so as of now, okay, momentum is in support of the bears. So momentum is supporting the bears. Okay, and it is expected that the next week, okay, it is expected to further come down. Okay, anyways, so all of these indicators are supporting the bear trend, and all of these indicators, moving averages, okay, and then the your Bollinger Bands, they are also supporting the bear trend. Only the Ichimoku is there that is still supporting the bull trend. Okay, but as you know that Ichimoku cloud, okay, it takes a lot of time, weeks, months, okay, for the market to hit or to cross the Ichimoku cloud, particularly on the weekly and on the monthly charts. Okay, so as of now on the weekly chart, it is clear that the market is bearish, clearly bearish. Now, so let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Okay, let me write it down. This is the daily chart. So daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay, so before I do the technical analysis here, let me write down the support and resistance levels. Okay guys, so these are the support and resistance levels here for S&P 500 index. Okay, and as you know that these support and resistance levels, they are extremely sensitive because I have calculated these, okay, by analyzing the last 100 years of data. Okay guys, so we are here on the daily chart. So let's first do the technical analysis. Okay, this is the lower band of the Bollinger Band. There comes the median. Market is in between the lower band and the median, which means the market is bearish. Then comes the moving averages. Clear fan out. Market has closed below the moving averages, which means the market is bearish. Then comes the Ichimoku. Market has closed below the Ichimoku. Market is trading below the Ichimoku, which means the market is bearish. Then comes some other technical indicators. We have this, the MACD, directional MACD is bearish. The divergence is not heavy, which means the market still has a lot of potential to come down. Then comes the stock RSI. Stock RSI is clearly bearish because the K channel is 18 and the D channel is 40. Okay, so heavily bearish. Then comes the divergence in the prices of the candles. Okay, it is again normal 40, 41, so that's not a problem. So market still has potential to come down. Then comes the momentum. So momentum as of now, okay, it is supporting bears. Clearly it is supporting bears. Okay, again, so means see, in short, all of the technical indicators on the daily chart are clearly saying market is bearish. All of the technical indicators. Okay, fair enough. Now let's do the okay, now let's deduce the movement of the market, the probable movement of the market in the coming week. This is the 200-day moving average. Now whenever you see market is so means whenever you see a rebound in the market, then you can see that rebound is going to happen, or means that during the rebound market is going to hit this, the 200-day moving average, and after hitting the 200-day moving average, see these moving averages will further come down, okay, here. And okay, so let me tell you what is most likely to happen here. See, on Tuesday, okay, on 22nd of February, on Tuesday, market is expected to come down. First, it will come down, it will find support here. See this 4290. Okay, I have told you about this, the 4290 a lot of times, and if you also see 1, 2, 3, and also in the previous month, so 4290 is a very strong support. So on on Tuesday, on 22nd of February, market is expected to come down. Okay, once it comes down, then there will be this, the lower band of the Bollinger Band. It will hit the lower band of the Bollinger Band, and also it will hit the 4290 support. Okay, and after hitting, so it may close around here. Okay, and if for some reason if we see a rebound, then what will happen? So this rebound may not be seen on 22nd of February, but this rebound may be seen on 23rd of February. Now on 23rd of February, what will happen? This is the 200-day moving average there. These moving averages will be here hitting the 200-day moving average. Okay, so now all of the moving averages, okay, they will consolidate around this price here. So this price is 4,400. So you can say like 4,400. So all of the moving averages are consolidating around 4,400 on 23rd of February, Tuesday, which means whenever you see a rebound will be there to hit this 4,400, all of the moving averages, okay, including the 200-day moving average, and there it will give you an opportunity to sell, and then further the market will come down. Okay, so down, up, and down. Now one more thing that you must not forget, that the technical indicators will not work, okay, especially when the geopolitical situation or some economic situation is extremely bad. Okay, because in that case it will be the emotions of the people, okay, so that will drive the market, the fear, basically the fear. So you must consider this point also. So the technical indicators will work only when the markets are stable, or means like almost stable. Okay, but if the tension, okay, if it increases between Russia and Ukraine, and if yes, and if Russia decides to invade in Ukraine, and if there is a real war, in that case forget about the rebound. Okay, everything will come down. Okay, but again, do not forget that whatever is going to happen in the market, okay, it is temporary. It is temporary, means everything is going to be means everything will stabilize, okay, in next 1 quarter. So again, my advice, if you are trading with the longer expiries, 1 or 2 years expiries, then hold your trade. If you have bought the shares, then hold your trade, because in that case there is not going to be any loss. There will be profits, not immediately, but after 3 months, after 6 months, after 1 year, there will be profits. Okay, so guys, yes, uh, okay, fair enough. So I have given the link to my Discord spreadsheet in the description of the video, so you can take a look, and whenever you are ready to join the group, so you just you need to just send me the email. That's it. Okay, and so guys, this was a technical analysis for S&P 500 index for the week commencing from February 22nd, 2022.